Welcome back. In today's video, we're going to be exploring Cardano's #1 problem and why I was wrong about this particular issue within the Cardano ecosystem, but it does not have to do with USDC needing to be on Cardano. We're going to discuss that as well, as Ripple is now launching a US dollar-backed stablecoin, taking on the $150 billion market cap dominated by Tether, with the Tether USDT stablecoin, and Circle with the USDC stablecoin. And so this kind of goes into putting Ripple or XRP into this new category of cryptos that are trying to achieve, I guess, blockchain silocy. I was going to say, being independent, but really it's siloing your own blockchain and pushing all of the rest of crypto and DeFi and interoperability away. And this is something that we've talked about with XRP in particular. What Ripple as a company is doing really, I think, should be very clear by now that it really doesn't have anything to do necessarily with the XRP cryptocurrency or with the cryptocurrency's price or price trajectory. And, one way to prove that very easily is the number of XRP that are being sold by Ripple on a regular basis over the last, 7 or 8 years, since at least the 2017 bull run. This has been an ongoing conversation. But one of the conversations that we've been talking about more recently is that Cardano's lack of stablecoin and interoperability and bridgeability to other chains is siloing its ecosystem and making it its basically on its own island where it can't connect, it can't cooperate and collaborate with these other blockchains. And XRP seems to be doing the same thing from the Ripple's growth perspective. And this begs the question, well, Cryptoviser, what exactly were you wrong about? And what is Cardano's #1 problem? Well, I think Cardano's biggest issue right now is the inability to see where the rest of crypto is going, where the venture capital is going, where the narrative is going. I mean, they got it a little bit with the AI standpoint, but it's going to be interesting to see kind of where that AI merger between SingularityNet, Fetch AI, and Ocean Protocol go. Because while they're saying they're going to use Cardano, can Cardano really take on 3 ecosystems and turn them into one unified ecosystem that is going to drive AI capabilities for potentially generations to come? That's a big question, but we're not talking about transaction throughput and capabilities of the blockchain on this episode of the Cryptoviser podcast. We're really going to be talking about what Ripple is doing, what Cardano is doing, and what the rest of crypto is doing, and why I was wrong about this one project within the Cardano ecosystem. Now, don't forget to give this video a free thumbs up. We upload every single day of the year since 2018 to bring you the latest happening in the financial world. Also, hit the subscribe button, turn on notifications, and give the video a free thumbs up, because you guys know Cardano is not free, but thumbs up are always free. So one of the big discussions is Cardano's lack of USDC stablecoin. This is a conversation that we started on this channel in the Cardano ecosystem. It seemed like the Cardano ecosystem picked it up for a while, but then maybe the gatekeepers kind of pushed it down and said, no. We have our own stablecoin that's launching, and this stablecoin that's going to be launching is going to change the world. And I cautioned my viewers about that, because if you look at just the 24-hour volume of Tether and USDC over $12.5 billion of 24-hour volume, that's more than half the entire market cap of Cardano altogether. Tether's market cap, 24-hour volume is $74 billion, which is basically almost 4 times the market cap of Cardano altogether. And so this idea that Cardano was going to change the world by creating their own stablecoin, I was a little bit skeptical of, and I think for good reason. But now what we are actually seeing is that, in my view, this is one of Cardano's biggest failures as we don't need this because we're going to have this. If Cardano's ecosystem continued to drive the USDM stablecoin while also simultaneously saying that they were going to work on USDC, I would say, okay, clearly they understand the need for multiple options and more liquidity in the ecosystem, but that's not the way that it went. The way that it went was, we have to wait for USDM, which is going to change the Cardano ecosystem forever. Now, granted, it's still a new stablecoin, but I do have a lot of concerns and reservations about this, as we've covered in previous videos. I think Cointelegraph or CoinDesk reported that The Mihen, which is behind the USDM stablecoin, is based in New York. And then they also said in the article that New York is where the BIT license is basically issued, which they shouldn't have said because it really has nothing to do with Mihen. And Mihen does not have a BIT license. Neither, I don't even think they have licenses in the US, but I don't know. I mean, they say that they do, waiting to see those. But the other issue is the community keeps pushing this narrative, which is making me very, very nervous, guys. Very nervous about the sustainability about USDM, because the community's narrative is this is non-reversible, non-confiscatable. Mihen has no control over the stablecoin, which is fundamentally cannot be true if this is a truly regulated stablecoin with fiat dollars that are backed. We've seen no attestations of the dollars that they have, no information of what banking institution within the United States they have their money in. And so in this case, I was wrong. I probably should have never even started to report on USDM on this channel until we had all of this information. Because personally, I would not put my money in USDM. It's been around for a few weeks now, and the coin has not been able to peg. And we don't know where they're regulated, who they're regulated by, where the money is being kept, what US financial institutions being kept in, and what auditing firm is actually confirming that the money is actually in the bank. These are really important questions, especially if you are interacting with any stable coin. Because, by the way, this conversation is not just going on in the Cardano ecosystem. There's other ecosystems that are also saying that they're going to launch stable coins, and crypto heavyweights, right? Heavyweights like founders of these protocols are torn over the new Ethena stablecoin. So I want you guys to listen to the concerns here. And then maybe it does have to do with Cardano, maybe it doesn't. I mean, for me, the fact that they haven't been able to peg the stablecoin since it launched, this is a huge situation. I mean, you guys can see here when I'm recording this, 99 cents, 97 cents, 99 cents. And now listen, people are going to say, but Cryptoviser, it's close to $1 and it's under, so it's actually better. But it was higher like a week ago, maybe less than a week ago. And the Cardano community was celebrating that. Oh, well, see how much demand we want. Well, you don't see, very rarely will you see a major stablecoin that is actually fiat backed depegging. And usually when it depegs, it's for a very short period of time because it's just during the process of either selling into dollars or buying and minting into the stable coin. But just also, before we go into the article about Ethena, I just want you guys to see. My view is that USDC can solve a lot of issues within Cardano. I found it very odd that Cardano was like, well, let's wait for USDM, which is going to save the world and it's going to change the world. And it clearly hasn't, right? It hasn't as of yet. And so why would they pause any development with USDC while they're pushing USDM? And USDM is saying that they're fiat backed and that they're regulated and that you're not going to be able to freeze any coin. This is nonsense. And I also want to know like why the Cardano community wants so bad that their coins cannot be frozen for any reason. Like if your coins are stolen and you're in a stable coin and it's stolen, like you want that money. First of all, it cannot happen, right? In a traditional financial sense, right? The banks wouldn't let that happen. That's where something doesn't seem 100% here. I don't know what it is, but we just don't have enough information, right? Where is the money being held? What bank is it being held in, right? Tether and USDC, they have auditors that actually look at their bank's statements and will attest to what is in there. But anyway, you can see on Solana scan, while there's a lot of conversation about how Solana is failing and transactions are going down, bottom line is, I mean, look at the market cap. Look at how much USDC is actually on Solana and how much is actually being transacted. So the total supply of USDC, when I'm recording this video, on Solana is $2.2 billion, 10% of Cardano's entire market cap. 10% of Cardano's entire market cap. USDM, on the other hand, has 178,000 total stable coins. And we don't even know if it's actually US dollar backed, right? And so Solana is showing Cardano how to fix the problem of liquidity, of bridgeability, of stablecoin usage, of people wanting to transact within the ecosystem. And for some reason, the Cardano community said, no, Cryptoviser, we don't need a stablecoin that with $2 billion of supply just on one blockchain. And if we look at the actual transfer volume in one day, on April Fool's, it wasn't a joke, it was actual transactions, $58 billion worth of USDC, 3 times the amount of Cardano's market cap. On March 31, $75 billion of USDC was transacted. On March 30th, $94 billion of USDC was transacted just in the Solana ecosystem. So the fact that people are still continuing to say, well, we don't need USDC, all this nonsense, I mean, it's like quite literally nonsense. And so Ethena Labs launched its USDE synthetic dollar on February 21, causing a stir among analysts for its double-digit yield. Crypto Twitter seemingly hasn't stopped talking about it since. One of the crypto heavyweights who raised the alarm on USDE is Phantom and Yearn Finance founder Andre Konji. He took to X to say that when a market conditions change, USDE can lose its collateral. He said, this is a new primitive that is gaining a lot of traction, and I'm seeing it integrated into protocols I consider to be very low risk. But from my perhaps incorrect understanding, this new protocol is very high risk. He pointed out that the mechanism that USDE uses underscores the importance of funding rates in Ethena's architecture and how if these turn, triggering liquidations, the asset could suddenly lose its backing. He said, so while things are great now, because everyone is happy long, sentiment can change easily. And yeah, I mean, there's obviously some other concerns here. According to the CEO of algorithmic trading firm Wintermute, he said that liquidations aren't of concern. He explained that the custodians, adding that the risk resembles FTX more than it does Terra Luna. Removing liquidations from the risk profile is something that this founder of Block Analytica, a risk intelligence platform, agrees with. He highlighted the custody risk, calling it one of the more significant risks. He addressed a number of concerns, debunking several while pointing out others, including exchange solvency and Ethena entity risk. And here's the deal, guys. The bottom line is these stablecoins, the fact that everybody's trying to create their own, I get it. They make money with stablecoins, right? You have to keep that in mind. So USDC is basically paying 5%. I mean, how much are they making on that they're paying you 5% or 6% or whatever the situation is? And so there is a lot of money to be made. But I remind you guys what happened with FTX, over leverage. And you may not see it now. You may not even see it when the liquidations happen, because we are at the beginning of a bull market, in my view. But the risk is that people get so comfortable with these individual protocols and they don't diversify, and everything can go one day, right? This can happen with any crypto, with any asset, with any stable. My concern is that Cardano's ecosystem is saying that this is superior to USDC when it's clearly not from a pegging perspective. It's clearly not from a regulatory perspective. It's clearly not from an interoperability perspective. And it's clearly not from an auditability perspective. And there may be concerns about USDC, but at the end of the day, they have a direct line into the Federal Reserve. And so when I think about risk and risk assessment, this is the same thing that I said when we were kind of assessing what was going on in 2022 with the collapses of these ecosystems. I said, I'm pulling a lot of my money out of these interest-bearing accounts because I did not think that the risk was worth the reward. Because all of these companies were going down and they're saying, no, it's totally safe in all of these yield farming programs. I'm like, well, it wasn't safe for the billion-dollar companies. Why would it be safe for me, right? And so a lot of people ended up, having that same kind of sentiment and pulled their money out of these yield-bearing accounts, and they were safe. People who didn't, they lost their money in these, exchange collapses. And so the way that I'm playing this is, on the channel at least, from an investment analysis perspective, is we are not talking about projects that are in development. We're going to be talking about projects that are deploying. We're going to be talking about projects that are time tested. Remember, guys, my general thesis for investments is 3 market cycles, right? A crypto has to be through 3 market cycles. If it hasn't really run the gauntlet. And either it's a trade or a very high risk trade or long-term hold. And personally, I think it's more risky to have those in your portfolio. Like if I'm looking at USDM versus USDC, I'm going to choose USDC. Clearly, a lot of other people are choosing USDC. If we just look at Solana's ecosystem, I mean, you can look at all of the other ecosystems, Algorand, Arbitrum, Avalanche, Base, CeeLo, and they're also using USDC. And they also have a lot of volume or growing volume on USDC. And so is it going to be as high as Solana? Maybe, maybe not. It doesn't matter, right? People are choosing Solana because it's trusted, because they learned from the previous cycle. And there's a lot of people who did not learn from the previous cycle, or were not around during the previous cycle, or aren't going to learn their lessons from it. And they will lose their money in these risky ecosystems. Again, whether it's DeFi, whether it's stablecoins, whether it's cryptos just in general. And so personally on this channel, we are no longer talking about USDM until they are able to provide clarity into who they're regulated by, where they're regulated, whether their coin is or is not confiscatable, if there is a hack or if there is a theft, and where they're based. There's too many questions for me to be talking about this on this channel and saying that the Cardano ecosystem will support it. Because if something goes wrong, people are going to say, Cryptoviser, you were talking about this. You were talking about this. First of all, I've been very big on USDC for a long time. And I still think that Cardano needs USDC. This is Cardano's #1 problem. This is a liquidity problem. This is an interoperability problem. This is a transparency problem. And overall, this is a huge, terrible marketing problem for Cardano, because Cardano wants everybody to, oh, well, Cryptoviser, you need to talk about this metric. You need to readjust this metric so that it makes Cardano look better. Nobody wants to do that shit. Nobody wants to do that. And so if Cardano wants to market themselves to these other ecosystems, to bring developers, to bring users, to bring dApp ecosystems on board on Cardano, they need USDC. And until they get it, it's not just me saying this. Grayscale, they dropped ADA and Atom after a quarterly rebalancing. Now, one of the things that we've talked about recently on this channel is the fact that we are reassessing our portfolio. The billionaires and the funds, they're also reassessing their portfolio, and Grayscale is doing this. Cardano has been part of the Grayscale Digital Large Cap Fund for years at this point, and they've been removed. Now, why is it being removed? Remember, most cryptos here are either very close to or approaching their all-time record highs pre-halving, right? Ethereum was very close to its all-time record high. Bitcoin passed its all-time record high. Solana very close to the all-time record high. XRP and Cardano, they haven't really moved in value, right? Cardano's all-time high is $3.10. It hit about 74 cents, which is, I don't know, like 1/3, around 25, 30% of its all-time record high. And now they're rebalancing and removing it. And what are they putting in place? Solana, right? And Cosmos ecosystem, I'm not really too sure about what the reasoning behind that is. This video specifically is more about Cardano. But guys, the bottom line is this cycle is very different than previous cycles. And this whole like, well, let's try these small things and hopefully they work, when I think everybody kind of knew that USDC, no stablecoin that you can launch on Cardano today is going to just surpass USDC even in 2 or 3 years, right? And so when you're trying to stay ahead in terms of a technology perspective, usage perspective, and at the end of the day, right, first mover advantage. And first mover advantage, I'm talking specifically about becoming the largest DeFi ecosystem, getting the largest stablecoin. You cannot tell me any ecosystem is all of a sudden going to have the largest stablecoin ecosystem when they don't even have the liquidity tapped into the traditional stablecoin ecosystem like USDC or Tether. And Ripple is doing the same thing. Ripple is literally doing the same exact thing. They want to launch their own stablecoin. And people are cheering this on and saying, well, this is going to help XRP. No, it effing is not. Because XRP still doesn't even have USDC. Think about that, guys. They're taking the same route that Cardano has taken so far, XRP and Cardano. And as I've explained, in my view, these are, and again, this is just my opinion, I could be wrong on this, but in my analysis, this is a very wrong choice for both XRP and Cardano from a price appreciation perspective. Keep in mind, there's going to be a lot of companies that are building on Cardano. They're going to do just well. Ripple is going to do just fine. But if you're holding the coin, that's a whole different story. And so I'm not holding XRP right now, and I'm not holding Cardano right now. And that may change if we see lower prices, if we see some technological advancement or decision. But on this channel, we are no longer covering this small stuff, right? This is, it's not even pegged. It's been 3 weeks and it's not even pegged. And I was told by the Cardano ecosystem that this was going to be better than USDC Cryptoviser. Everything, this was going to surpass USDC and it hasn't done anything for Cardano just yet. And listen, maybe I'm just not thinking long-term enough. That's definitely possible. But again, we're in a bull market, in my view, and this is where we make money. And we're not gonna be making money, 15 years down the road. We're talking about making money this year and next year during the bull run. At least that's my opinion, my strategy, my thesis on the market. Let me know what you guys think. Do you think that this stablecoin situation is Cardano's largest problem and therefore also XRP's largest problem for this upcoming 2024 and 2025 cycle? Let me know your thoughts down below. And again, just look at the data on SolScan. It's very clear that people love using USDC and that even if you don't necessarily want to use it, you're not allowing the Cardano ecosystem to thrive by gatekeeping and holding back USDC from getting on the blockchain. And so I'm going to leave it right there. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. I'll see you tomorrow. Invest responsibly. Do your own research. And for today, we're going to say USDC on.